So, what if I told you that having a 90% win rate in your trading could actually lead you straight to financial ruin? I know it sounds completely backward, but it's one of those hard truths that separates the pros from the gamblers. Today, we're going to pull back the curtain on the mathematical secret that every single successful trading system is built on. The stats are pretty brutal. Most traders fail, and it's not because they're unlucky. It's because they're operating without a real, provable advantage. They're basically just flying blind, clicking buttons based on gut feelings, hope, or some tip they heard online. And that right there is what this is all about. We're going to break down this whole idea of a quantifiable edge and show you how to actually build one from the ground up. This isn't about feelings or hot tips. This is about cold, hard math.
Right. So at its very core, a trading edge isn't some mystical feeling you get. It's a mathematical principle, plain and simple. And it all boils down to one powerful concept: expected value.
This equation you're looking at, that's the trader's compass. It is the mathematical formula that guides every single decision. If the final number is positive, you've got a tailwind pushing you toward profit. If it's negative, well, you're sailing straight into a storm. It really is that simple. So let me ask you this. Would you play this game? A 90% chance to win sounds amazing, right? Most people starting out would leap at this without even thinking twice. But let's actually do the math here.
And wow, there's the result. It's actually a losing game. Even though you're winning 9 times out of 10, your expected value is negative 10 cents. That means, on average, every single time you play, you are losing a dime. Over the long haul, you are mathematically guaranteed to lose all your money.
And this is the point I really want you to get. A high win rate, by itself, is a total vanity metric. It means absolutely nothing. What matters is the relationship between how often you win and how much you win versus how often you lose and how much you lose. That's the whole game. Okay, so having a positive expected value, that's step one. But it's not the whole story. That positive number needs a secret ingredient, a catalyst to really work its magic. And that catalyst is time. This brings us to a super important idea called the law of large numbers. This is the principle that lets professional traders sleep at night. It's like the law of gravity for statistics. It guarantees that if you have a real edge, it will eventually shine through all the short-term random noise. But, and this is a big but, you have to give it enough time and enough trades to actually work. Just look at this chart. In the beginning, it's a total mess, right? It's up, it's down, it feels completely random. This is the danger zone. This is where most traders panic and ditch a perfectly good strategy because the short-term results are scaring them. They start strategy hopping, always looking for the next shiny object. But look what happens when you just stick with it. Over hundreds, maybe thousands of trades, all that random noise just cancels itself out. And that beautiful, underlying positive edge starts to reveal itself in a smooth, upward curve. That is the power of a real edge combined with time. Now, this leads to a pretty deep concept called ergodicity. Here's a simple way to think about it. If 1,000 people each play Russian roulette just once, you'd expect about 167 of them to, well, that's an ensemble average. But if one person plays it 1,000 times, they are almost certain to lose. That's the time average. As a trader, you live in the time average. Your personal journey is the only one that matters. So we figured out we need a positive expected value, and we need to give it time to play out. But how in the world do you even know if your strategy has a positive EV to begin with? Well, that's where rigorous, data-driven backtesting comes into play. Backtesting is basically how the pros do their homework. You're taking your set of rules and running a simulation on years of past market data. It's not a crystal ball for the future, not at all, but it's about gathering hard evidence to build real conviction that your edge exists. But you have to be so careful here. Backtesting is an amazing tool, but it's also filled with traps. The biggest one is called overfitting. That's where you tweak and tune your strategy until it looks absolutely perfect on past data, but then it completely falls apart in the real world. It's kind of like building a race car that can only drive perfectly on one single stretch of road. So how do we go from a simple backtest to something truly professional? We don't just test the strategy, we stress test it. We actively try to break it to see if the edge is the real deal or if it's just some fragile fluke that only worked in the past. A pro-level stress test has a few key steps. Yeah, you start with the basic back test, but then you do what's called a sensitivity analysis. You start messing with the rules a bit to see if it still holds up. And finally, you run Monte Carlo simulations, which generate thousands of possible future outcomes to give you a much clearer picture of what could really happen. And this is what you're looking for. A robust, durable edge works across a whole range of different conditions. Its performance might get a little worse if you change things, but it doesn't break. A fragile edge, on the other hand, just shatters. It falls off a cliff the second the market changes or you tweak a variable. You want to find those robust edges. So let's just wrap this all up. A real durable trading edge isn't just one thing. It's really a three-legged stool. It has to start with positive math. It needs the discipline and patience for that math to actually work. And it absolutely must be built on a foundation of rigorous proof so you know your edge is real and not just an illusion. And that leads us to the one question you have to ask yourself. Is your trading built on a rigorous professional process, or is it built on hope? Are you running a business, or are you just buying lottery tickets? The answer to that question will define your entire trading career.